Hello everyone, this is Evan here from The Trade Risk on Friday, October 28th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off the video with some of your favorite names, those popular individual high beta technology names, most of which reported earnings this week. We'll take a look at where they stand now. Before we jump into the video, I want to just remind everyone, if you haven't yet subscribed to our YouTube channel, please do so. Bottom right hand corner, click that subscribe button. Just keeps you up to date with all the latest that we're doing. I'm going to start doing more live streams. We've done those in the past, and it'll just keep you notified when we launch those and publish new videos. So let's get into the action here. Quite a bit to talk about in regards to the indices. The S&P 500 SPY ETF finished down on the week 67 basis points, so a little bit of a tough week here for bulls. Let's talk about the weekly time frame once again. We're still consolidating above our breakout multi-year highs that we broke out from in July. But notice we're just sitting on top of the old breakout high levels around this 212 SPY level. This is a very important point to hold. We've talked about the sort of high stakes area that this represents, because if we do start to creep lower and break below 212 and get consecutive closes below there, we're suddenly back in this old kind of range that we've been in. When you zoom out, yes, we broke out in July, but still we haven't gone anywhere since July. In return, we haven't gone anywhere since the beginning of 2015, late 2014. This market is still very, very sideways, and there's not a lot of energy behind it. So when we go down to the daily time frame, we're going to talk about the sort of high stakes area that we're at. But when you look at the weekly, we are still in an uptrend. We are still above the 2015 highs, and we are making higher highs, higher lows. This consolidation can still very much be bullish action as we consolidate right above these levels, or at these levels that we're at right now. But we need to get the action. We need to actually see price action confirm that. But it is, reasonable to be sort of optimistic here as we consolidate at highs, while sort of sentiment's not at highs, all that good stuff that we're not going to go into in that much depth. Let's go down to the daily time frame, talk about this price action. This was a tough week, mostly because of how we opened, how we started the week. So take a look at Monday's candle. That's this session right here. We actually started with an upbeat kind of gap higher above resistance, above an area that has been a pretty important inflection point. That's about 214 and a quarter. And we started the week kind of gapping up and closing above that level. In fact, the Qs actually closed at all-time highs on Monday. So a very kind of optimistic, upbeat note. But what ended up happening was consecutive lower closes each and every day following. So from Tuesday to Friday, all we did was sink lower as the week went on. So notice we did close here near the lows, off the lows of Friday session and the week, but still pretty much near the lows. A bearish looking candle. If you go back to the weekly chart, we actually almost put in a bearish engulfing week, but the bulls saved it just enough here on Friday late in the day not to cause that to happen, but it still was pretty close. Now, a few things to point out. We are at a very important kind of inflection high stakes point. We discussed that. This 212.50 level was support in September. It was support in early October, and now it looks, still to be support based on Friday's action. As you can see, we got that rally and close right at it. So next week is going to be very interesting. Do we get some follow through lower? Do we get a pop higher? Every time we've come down here, we've either gapped higher or popped higher that next day. We haven't been able to get any follow through action to the downside in this market as we get to these price levels. So be interesting to see if we actually get that change of character. Is the IWM kind of the leading tell here as it started to break down this week? We'll get into that in just a moment. So the S&P 500 SPY ETF, consider it vulnerable and at an inflection point that is worth paying attention to. if you want to be bullish, if you're looking to play the long side like I primarily do, you really just need to get above 214 and a quarter. This line right here, this represents your sort of line in the sand. If you want to get upside momentum returned, you got to get above here. That's when I'd start to get more optimistic on this market. So long as we're below it, you want to be either defensive, patient, and just tactical, pick your spots. As far as I see it, below this 214 and a quarter level. Now let's get into the IWM, which is the most concerning part about this market now, as it clearly broke support, significant support this week. If we go to the weekly chart, take a look at this candle. We're down 2.5%. We did bearishly engulf sort of last week's session, even though it was a very quiet, tight range last week. But we did kind of accelerate lower. We're below the 20. You can see the 8-period moving average now racing below there. So this is a bit concerning. This is happening at a pretty key level. This 120, 120.50 level has been a sort of inflection point going back in the Russell IWM for the past few years. So this is a bit concerning. Again, take it in perspective. Depends on your time frame. You're still making kind of higher highs and higher lows here in this channel. You want to see support basically hold exactly where it is now. You don't want to see losses accelerate too much more as you start to kind of snap this very subjectively drawn trend line. You could say we already snapped it. I don't want to get into that game, but you can just see sort of where we are in that spot. So IWM, you got to be cautious here. Not a point to be a hero, at least not the way I look at it. I want to get back above 120.50. Maybe early next week, we get a fast V-shaped surge back above this level, proving to be some type of false breakdown. Very real, it's a possibility for sure. But until it actually happens, you want to be cautious here. The Qs, they continue to remain close to highs. Again, we made all-time highs on Monday. We've pulled back since, but still a very sort of tug of war here between the small caps, the NASDAQ 100, and market just kind of juking here based on these different sectors. So very difficult, lots of chop, lots of indecision. Just got to recognize it, know your time frame, sort of plan accordingly. So let's get into some of the other markets now. The equity markets, of course, as a whole now, we could just say keep an eye on the SPY. It's at an inflection point. You want to pay attention to that next week. Getting into TLT, we saw more pressure here this week. We finished down 2%. We are now very much below this 132 level, which had been prior resistance, was support. We broke down from it. That was the past couple week lows. And you can see we had this kind of like breakaway gap here. Again, we don't know, it could get filled, but you want to be cautious here. This is, a good short setup, or, you at least want to be just cautious, defensive. Same thing like we talked about in the IWM. If we got a rally, a fast, quick reclaim of 132, that would be constructive to me. That would say, okay, maybe we just kind of washed out, had a false breakdown. Till that happens, I don't want to be a hero. You got to be cautious here in the TLT. Let's go to the metals next. Gold didn't really do a whole lot this week, mostly just moved sideways. You can see it's still trying to catch its breath here after breaking down early October, and you can see it's just moving sideways, very tight ranges here, so still just waiting for more to kind of come here in gold. If we go to silver, basically the same exact thing, still trying to stabilize off of the early October breakdown, and it just hasn't given you many more evidence as to whether or not we're going to see continuation lower, or if we are going to try and make a run back up to those previous highs. So still want to be careful. Of course, the last major move here was a breakdown, so you do want to give the sellers a bit of credit in general, but you still need to kind of wait for a little more evidence here before looking at any new trades as far as I see it. USO also had a tough week as well, down 4%. You can see breaking below this support level. We had a little nearby kind of 1130 area of support, and you can see we now broke below it, closed the week pretty pretty much on the lows, so you got to be a little bit cautious here. If you zoom out, you just have a bigger, kind of larger consolidation pattern at work. So with the 8 and 20 starting to curl back over, we're losing momentum. Got to be cautious here. Once again, be interesting to see how we start the week. We have a lot of markets where we're starting to break down, but if we saw some type of ripper to the upside on Monday and we quickly reclaim 1130, once again we have this scenario of potentially being a false breakout or breakdown. And I'm saying that in a lot of these markets, but they all just, keeping that in the back of my mind, keep an open mind right now. We want to see if we get follow through lower or if we do have sort of the opposite scenario happen. UNG also real tough. Commodities slammed basically across the board this week, down 7%, put out a post. We were long this into the week. We stopped ourselves out on Monday, which was, or was it Tuesday? We stopped ourselves out in here. This was a longer term kind of breakout play. We stopped out because we fell back into this range that we were playing the breakout from. Therefore, there was no real reason for us to be back involved in this until it demonstrated more strength. So UNG, we took a small loss in this. We are no longer in this trade. And, again, from the weekly time frame, you could still say this is fairly constructive action. We're still just moving sideways. We tried to break out 2 weeks ago on the 7th or 3 weeks ago. That breakout ultimately failed, and now we're back into this kind of bigger consolidation pattern. So UNG, maybe some volatility in the near term, but you got to wait for that to set back up. Now let's jump into some of the sector breakdown here, and there has been, I get a few new ones to actually take a look at. XLP, this is one that's been basically a dog for a long time, but this is actually shining on the upside this week. Notice it finished up 84 basis points. If you go to the daily time frame, you can see looks like this support down here is trying to hold, or at least we're seeing early signs of stabilizing right below this $52 level. So we didn't close quite at the highs, but we managed to hold in there on a relative basis. If you can start to break above this trend line, these highs here of $53 or so, $52.90, maybe you get a nice little pop to the upside. Maybe you create some type of inverted head and shoulders or something like that. But XLP notably outperforming this week, so I want to flag that one's pretty different. XLK continues to work, right? This is the technology which has been in our sort of leadership category for quite some time. You could throw semis in there just the same. IYT also a little bit, this one's drifted in and out of sort of our leadership sectors, but on a relative basis, this is still stubbornly sticking near recent highs. So I think you do want to pay attention to that. Take a look at the weekly time frame. You can see just how tight this has gotten over the past several months. So keep an eye on the IYT. I think that one could still be interesting. On the downside, you have XLV, which just is clearly the loser here over the past several weeks, even couple months. As you can see, ever since losing $72, it just continued to accelerate lower. This had a very challenging week. Also, IYR also had a lot of difficulty this week. This is the real estate index fund. You can see still making new multi-month lows. We took out the lows here from early October after that violent selling we saw to start the month. And you can see it's already heading back down, breaking, or at least looking like it wants to break below the $76 level, which played an important point of resistance here throughout late 2015, early 2016. And finally, consumer discretionary. Maybe Amazon had a little bit to do with this, but this one was certainly challenged this week as well. You could see down 2%, starting to look a little vulnerable here if it starts to lose these $78 lows and convincingly kind of drop back into the old range here after trying to break out from August. So you want to be aware of XLY as well next week as a potential laggard. Now, getting into some of these individual names, Apple, we know they reported earnings this week, a downside reaction, nothing dramatic by a few percent though. We did close lower, and you can see the weekly candle down 2.5%, all things considered. You can still see though on the weekly, we're above the 8 period, so even with the recent weakness, we're still holding up, all things considered. On the weekly time frame, we're still in an uptrend, so keep your time frame in perspective. Perhaps we have to come back down here and retest or look to see if this is still support down here around 112. That's probably where I'd be looking to start to pay a little bit of more attention to. Otherwise, we still haven't been able to fill the gap from earnings, so you could get a trade above 115, 116 for a gap fill, and then maybe a push to highs here if that sets up next week, so pay attention to that. Google also reported earnings, basically did nothing after reporting, closed flat on the day Friday. You can see weekly time frame still very, very healthy here, basically right at all-time highs. It's above 790, which is this long channel breakout, and it's above this little consolidation here as well. So looks good. If it starts to lose 810, 812, you want to be a little more concerned. 790 is the big level on the downside. Amazon also reporting earnings. This one not immune to its results, so this one getting a little bit of selling pressure creeping in here. You can see with the gap lower, finished lower by about 5% here on Friday, giving back a couple weeks worth of gains. But on the weekly time frame, you can see we're still above the 20. We're now below the 8. This has held as support for quite some time. The 8-period EMA on the weekly. So you just want to kind of sit patiently here. I wouldn't go jumping in trying to buy this first dip. You just want to see where it can settle in. It closed on the lows. There's some support down here around 760. You could throw some fibs on here and start to redraw retracement levels. I think it's one you just want to be a little patient with, see where it ends up before kind of jumping in there. Twitter also reporting earnings this week. Again, very muted reaction, still hanging out in this range, which is now almost 3 weeks long. In fact, it is 3 weeks long, and it's just kind of sitting here on its own. This is a bit of an island right now, based on the gap down from the 10th of October, and we're just waiting to see which way this sort of leans. The way I look at this from a bigger picture landscape is this band that I have drawn in here. This is really where you want to see Twitter reclaim if you're bullish. 1950 on the upside to even 2050. If you can get it back above this general area, I think you can get momentum to return. You could get some bullish healthy price action, but as long as we're below there, you just want to be cautious. You can see the 8 is trying to curl back below the 20 on the weekly time frame. Took forever to get this cross on the upside, and now it looks like it's going to quickly be given up. So you want to just kind of be cautious here, see how this range resolves itself. You have a pretty clear 1830 to approximately 1675 or so of a sort of support and resistance level to pay attention to. And then finally, Tesla, let's finish the video there. Also reporting earnings. Initially had this pop, but it did get sold, and it actually is lower than when it went into earnings. You can see this kind of tightening formation is still controlling price. We tried to break out above it, sellers pushed us back below it, and we're just kind of sitting in between this little bit of a rising trend line, this falling trend line, and it looks like it's more patient overlapping price action. We're gonna have to be patient with this one before we get a real sort of clean directional move. So that's it for this weekend's video, probably a long one. Thanks again for watching, and reminder, if you haven't subscribed, do so, bottom right hand corner. Have a great weekend, and I will talk to you soon.